As we sober up from our New Year's celebration, one would want to ask, is the party on Dalal Street still on? And going by popular belief, one would like to think that there is still steam left and that things can only get better in 2024. Now, there are some wildly bullish theories in favor of the bull market scenario, but that also means one can really not take anything for granted. I am Stacy Pereira and with me is Santosh Nair, and we are here to give you a couple of scenarios that are likely to play out in 2024. And you can then make that choice if you want to support the bull case or the bears. And given that spectacular run-up that we've seen over the last year, one wouldn't want to be caught on the bears camp, especially since we're seeing those returns of the FIIs and there is massive money from global investors waiting to be deployed.
Well, Stacy, the counter argument to that I would say is that we've heard that argument in the past also. We had heard that in 99-2000 and also in 2007-2008. But remember, Stacy, when sentiment changes, that money simply vanishes or it may take longer to get deployed.
Well, what about our domestic investors? They have been steadily really putting in that money into mutual funds at least. Look at the growth we've seen in SIP numbers month on month. That inflow is only not going to dry up at least anytime soon. And a lot of Gen Zs are now regularly investing in mutual funds, and you can include me in that as well.
Well, I take your point, Stacy, but sorry to sound like a party pooper. I would say that a lot of investors who have rushed in to put money into mutual funds over the last couple of years have not really been tested by a bear market. So whenever things take a turn for the worse, suddenly you will see a sharp dip in the inflows that come into mutual funds. We have seen that as recent as October of 2021.
That would be something to really take note of. But I think the strongest tailwind for us right now, and for the bulls at least, is the point and the fact that the Fed has already indicated that it's going to be cutting rates even perhaps earlier than what we are expecting, as early as March even. So that is something that we can really sit cushion and be happy about, and then that would indirectly bring in the higher inflows into an emerging market like India, which could be hopeful.
Well, Stacy, there's a saying which goes, buy on rumors, sell on news. So when the Fed actually starts cutting rates, you could actually see the market go down because a lot of it has already been priced in. In fact, investors seem more hopeful of a cut in interest rates, but we're not sure if the Fed is ready to oblige them yet.
You're such a spoil sport, Santo. Well, leave the Fed at least for now. Let's look at what the RBI can do, and we're hoping that they will also cut rates for sure, hopefully, and that would then definitely boost at least our domestic investment consumption. For now, we could say that. What would you have to say about that?
Well, Stacy, first of all, the RBI looks unlikely to cut rates before the Fed cuts rates, and with interest rate cuts, they best work when there is a surprise element, like the one we saw in March 2015 when RBI cut rates ahead of a scheduled monetary policy. So market doesn't go up necessarily when everyone is expecting a rate cut and then the rate cut happens.
Right. So an unexpected move is rather what is going to be the better one, or which can actually get markets off guard, but would really change the scenario then in that case. But for every other reason, we have another reason to believe that the NDA could be returning to power. So bulls are on that strong footing, at least with that in mind.
Well, Stacy, I would say hold your horses because predicting election results can be a tricky affair. In 2004 as well as 2009, the results were not exactly what the market expected, although the first time it was a negative surprise and the second time it was a positive surprise. So the thing that we're speaking about here is mainly the margin of victory.
Right, so am I running too ahead of myself? But irrespective of the margins, the NDA returning to power means policy continuity, and which is what we are actually being hopeful about. That does not necessarily mean that it is good news for the markets.
Well, Stacy, I think to a large extent, again, policy continuity has been priced in by the markets. Now, when that happens, you have a bigger downside because should the policy decisions not be as per market expectations, then you have high valuations acting against you.
Right. So, well, what about corporate earnings and earnings growth? Then that too is a tailwind for us, and we are hoping that it will really take off in 2024.
Well, to a large extent, again, market has already rewarded those companies which are expected to deliver strong earnings. So from here, I would say the risk of a disappointment is higher. markets is unlikely to pay premium valuations beyond a point.
Right, and India, of course, is still that best performing economy compared to its global peers. So investors should be ready to pay more for Indian equities, even though our valuations are high.
Well, Stacy, you make money on a stock when you buy it either cheap or at best at fair valuations, not when you buy them expensive. So if valuations are high and investors put in money, they're not likely to make a lot of money.
Okay, let's keep the fundamentals aside, that picture, and unlike the previous bull market, we can say that the market is not heavily leveraged this time around. A lot of the derivatives exposure is through the options route. Also, brokers are collecting those margins on time, so that means there is less of that panic situation that we could occur, right?
I take your point, Stacy, but two things here. One is that if there is a black swan event, then you could see a lot of options traders losing money. Options, even though they may look safer, they're still leverage position. The second part about brokers collecting money on time, well, if the prices were to fall sharply, many clients may not pay additional margins and rather they would unwind their position. So stock prices could fall even sharper.
Right. And if you are still wondering what theme or sectors you should be betting on in 2024, remember 9 out of 10 experts are quite equivocal that it would be financials that will outperform in 2024. So go ahead, Santo, tell us, would you want to agree or disagree with this one?
Well, just because everyone is bullish on the stock necessarily does not mean that sector will outperform. You saw that with metals last year. At the start of the year, everyone was bullish, and then towards the end, metal was among the worst performing sector. So I would say that, stay away from consensus estimates.
Well, right, financials are that best proxy, we would say, in a growing economy, and consensus prediction for the year has clearly that poor strike rate, we could say, on this one. But what about the defense story? Will this continue to outperform this time around, especially because we've seen those strong order books?
Well, again, market is too optimistic on defense stock, and my counter argument to that, Stacy, is that public shareholders are not necessarily the priority for the government. I think it's the public at large that's the priority for the government, and so market is expecting that there will be no nasty policy surprises, but one can't always be sure of that.
Well, Santo, those were some really interesting insights that even our viewers can look forward to in 2024, but it will be up to you whether you want to decide to be on the bull case or the bears. That's for you to decide.